Hello, this is Josh Belk with Belk on Business Podcast. Today we're going to talk a little bit, today and next week, we're going to talk a little bit about some of this additional IRS funding that's coming down the pike, or actually has come down the pike, and some of the changes that we're going to see into place. Today we're going to talk a little bit more, kind of just a little bit of an overall, just an overview of what's going on, and then next week we'll talk a little bit more about some of the specifics on the improvement side. Today we're going to talk a little bit kind of at a high level, and then a little bit on the enforcement side, and maybe some of the things that we can do as business owners in regards to internally inside of our business to be able to prepare and just be very practical and prudent on how we go about conducting our business in case, and in all probability, at some point we will have to deal with either the federal. In this case, we'll be talking specifically about the federal side, the IRS side, or the state side as well. So today we're going to talk a little bit about just a kind of a high-level overview of the funding that came down the pike through the Inflation Reduction Act. So as many of you may know, last year in the fall, the Inflation Reduction Act was passed, and I'm going to try not to get too political for those of you that know me personally know I kind of enjoy talking politics a little bit, and unfortunately this is kind of one area that we're seeing, as in so many areas, we're starting to see politics really kind of creep into really kind of every aspect of life and how we conduct ourselves, especially as it relates to the government that unfortunately at times we have to live under, and is not overly pleasing, especially over the last few years. We've kind of seen this grab of power kind of at the federal level. So first of all, let me kind of a statement I've given quite a few times when I've spoken. I'm not sure if I've done it on the podcast, but when I've spoken publicly, I've mentioned this line, just kind of understanding the tax code and its purpose. So we have to understand that the tax code, Congress, when they go through and pass these laws, and then a tax code is drafted, or we see just practically how the IRS implements things, all of that is done in an effort to get us to act in a certain way. So when we go back and we look at the Inflation Reduction Act and what was passed last year, it was really kind of focused in many different areas, but to kind of two of them specifically that's kind of given the most press, and that is kind of the quote unquote clean energy, kind of that green environment type of kind of trend that we've seen a lot of legislation during this Biden administration. And of course, the Inflation Reduction Act, kind of a lot of what's in that was really kind of goes back to now President Biden when he was a candidate, and some of the things that he wanted to see implemented. And so it kind of has kind of a number of different areas inside of this Inflation Reduction Act. And of course, a lot of it is kind of toward this green energy. And then with the IRS side, it's kind of it's really there to kind of make sure that to try to address this tax gap, as well as implement some areas in regards to get business owners and individuals to act in certain ways. So kind of this line is the tax code is written in a way and is enforced in a way to get us as taxpayers to act in a certain way. And you think about it as when you were a kid growing up. And your mom or your dad may reward you for certain behavior or punish you for certain behavior. So you went through and said, you know what, if you go and you do this, we'll give you, so say, go through and you pull weeds, I'll give you an extra $10. Okay. We kind of see this at a much larger scale when it comes to the tax code. You go through and you deploy money in this way, or you go and you do this particular type of activity, we'll either give you a tax deduction or a tax credit. Okay, and so just to get us to act in a certain way. And of course, there's other aspects of it. Really kind of the redistribution of wealth is done through the tax code. Maybe kind of the more overreaching aspects that we see of the tax code, as well as funding our government as well. And so it's really kind of just this redistribution of wealth and to get us as taxpayers to act in a certain way. Just like your parent did when you were a kid, they reward or punish you depending on how they wanted you to behave. It may not have been a right or wrong issue. It may not have been a morality type of an issue. Of course, everything in the tax code, although they want to act like it's something that's moral, it's not. It's an amoral type of a thing. And so it's just simply moving money from one person to another. Now, we can either do that voluntarily as business owners, as individuals, deploy capital in certain ways that gives us certain benefits as it relates to tax deductions or tax credits, or we can simply not do those things and maybe just pay more in tax. So that decision is ultimately up to us. But ultimately, the hopes in when legislation is passed is to get us as taxpayers to act in a certain way. And so as we see this funding that came down, and the number you see on in the press usually is $80 billion. Actually, it's just under $79 billion that is being deployed to the IRS, and it basically covers a few different areas. And so one, it's to enforcement, operation support, system modernization, and taxpayer services. And I'm going to in a moment here just kind of give you a little bit of a kind of just what the IRS has said directly as it relates to each of these areas, and it might kind of provide a little bit of light as to where the IRS may go about spending money in this area. Now, we've already seen some of this money already spent, and we're already starting to see some of the byproduct of the spending into the IRS, or the additional funding into the IRS as it relates to how the IRS is interacting with taxpayers and some of the changes they have been going on internally. Now, when this Inflation Reduction Act was passed, the IRS came down with a plan, and there were certain objectives that they've outlined, and I'll just kind of read those here. First of all, to dramatically improve services to help taxpayers meet their obligations and receive the tax incentives for which they're eligible. So notice right off the bat, the first thing they say is talking about incentivizing taxpayers, once again, to get us to act in a certain way. Secondly, quickly resolve taxpayer issues when they arise. Now, for anyone that may be listening to this, if you've had to deal at all with the IRS since the pandemic, it's been an absolute disaster. I mean, literally, we saw just truckloads of documents just not get processed. And so it was just really, really difficult to try to interact with the IRS. And of course, their funding was cut back under the prior administration. And so there wasn't additional funding. It just really, the IRS really wasn't supported. And so ultimately what we've seen because of that, and maybe it's just the government and the way government employees just simply operate, I don't know. But whatever the case may be, we just saw that the interaction that the IRS had with taxpayers was horrible to begin with, and it's just absolutely deplorable the way that they've interacted with taxpayers, or have just chosen just simply not to interact with taxpayers over the last few years. So really kind of some of this money is supposed to go through to help resolve taxpayer issues more quickly. I'll talk a little bit more about that on next week's podcast, and we talk a little bit more about the technology side and some of the areas that the IRS has come down and how they are going to go about spending this money as it relates to the taxpayer side. Another part here, focus on expanded enforcement on taxpayers with complex tax filings and high dollar noncompliance to address the tax gap. So in their minds, they're thinking that they're going to close the tax gap by auditing, and this number that gets thrown down that we've seen from President Biden and others is so $400,000 and above. Like somehow you're a bad person if you make $400,000, you're an okay person if you make $399,000. Okay, it's just kind of a weird dynamic that they've set this kind of arbitrary threshold that we're going to punish you for being more successful. Okay, even though we know from statistics, and I'll talk about this a little bit more in a moment, statistics prove to us that if we go through an audit, people that earn over $400,000, that it is not the best investment of time. Okay, however, it is kind of one of those things that it's just kind of there's more of this political play, I think, from President Biden and those in Congress to want to kind of just appear that they are pro, blue collar type, lower income type individual, and they're going to punish these big bad business owners that make all this money. Okay, so that the area of enforcement. Next, deliver cutting-edge technology, which is almost humorous. The IRS has never had anything cutting-edge, but deliver cutting-edge technology data and analytics to operate more effectively. So any sort of technology that they decide to go ahead and implement would be a drastic improvement. So much right now has to be done by paper. It's very frustrating. Try to call them, forget about it. You're not getting through to them. Send them letters. They may or may not choose to address it, or they just send you a canned response without actually reading the correspondence. Just issues we see over and over and over again trying to represent taxpayers. And then the last objective here, attract, retain, and empower a highly skilled, diverse workforce and develop a culture that is better equipped to deliver results for taxpayers. That is not at all their interest. It's kind of more or less this DEI type thing that we've seen just kind of really just kind of shoved down our throats as Americans. And so they're going to go through, I don't know how in the world they're going to go about finding these people. I'll talk about that here more in just a moment. So with this $79 billion in funding going into a few different areas, first is the enforcement area. So $46 billion of the $79 billion, I'm just using round numbers here, toward enforcement. This is what the IRS has said about this: to determine and collect owed taxes, to provide legal and litigation support, to conduct criminal investigations, including investigative technology, to provide digital asset monitoring and compliance activities, to enforce criminal statutes related to violations of internal revenue laws and other financial crimes, to purchase and hire passenger motor vehicles. Okay, fine. So you should kind of go through and if you kind of listen to that, or if you read that, everything on here, we're talking about criminal. We're talking about, the word criminal or crime appears a couple times in this kind of just this general paragraph. And so it's just not kind of going through with the intent with just simply trying to help taxpayers pay what what the IRS says and our federal government says is rightfully theirs to pay. And of course I disagree with that as well, but from on a political end. But we kind of see this word crime and criminal kind of riddled through this, a little bit concerning. However, we've seen really kind of the weaponization in recent days of our federal government against individuals they happen to disagree with or they don't like. And so this has been going on for years. It's just now kind of becoming more apparent if you have your eyes at all open to what's going on. And so the point of this enforcement isn't necessarily, if we read this paragraph, it talks a lot more about criminal and just kind of like this big heavy-handed arm of the IRS, and not simply trying to help taxpayers, just because most taxpayers just simply want to do and I'm going to use the right thing. They understand, okay, they need to file their tax returns. They're going to do things, and they try to do things the right way. And but there are bad actors out there, and why they feel like they need use this type of language of criminality is a little bit disconcerting. But it definitely aligns with what we're seeing publicly done right now by our federal government. So $46 billion in enforcement. Next, $25 billion in operation support. So this is supposed to support taxpayer services and enforcement programs, including rent payments. This is, quote, rent payments, facility services, printing, postage, and physical security headquarters, and other IRS-wide administration activities, research and statistics of income, telecommunication, information technology development, enhancement operations, maintenance and security, to hire a passenger motor vehicle. So the first two here we have talking about motor vehicles. So for them to buying vehicles. So we see this money kind of being dumped. But what we are really seeing, as you kind of read through this, really the IRS infringing on taxpayer privacy. So a lot of this funding is to go through, we're going to use technology to look into you, okay, to look into your finances, to see what you have going on. Unfortunately, once again, this is the direction that we're going. Next, $5 billion in system modernization funding will go towards several projects, including development of callback technology and other technology to provide a more personalized customer service, not including the operation and maintenance of legacy systems. So this here, it'd be nice, and of course it's a smaller area, $5 billion as compared to $46 billion in enforcement, and then $25 billion in operation support. So majority of it is going toward enforcement, toward really kind of looking into you as a taxpayer. And then we get into the small, where we're going to spend a little bit of money trying to improve technology to try to make your customer experience is, and for most of us, we don't want an experience at all with the IRS, okay? But if we have to have an experience with the IRS, that is one that that's a little bit more personalized, and right now, just getting a response would be nice, okay? It doesn't necessarily, as far as personal, a personal type of response, one that gives me the fuzzy wuzzies as if I was, trying to shop on Amazon or walk into my local retail store, okay? It's just kind of one of those things, it'd be just nice just to have some sort of a process to where we can interact with the IRS. It can be done effectively, and we can get our questions answered or get problems resolved. So $5 billion towards system modernization funding, and I hope indeed that they do this. And then $3 billion taxpayer service programs such as pre-filing assistance and education, filing and account services and other services. And I don't think this is all bad either. If the IRS can go through and provide, especially lower income taxpayers, file their return to help them, that type of thing, to really for the government to try to serve some of its taxpayers, especially those that are in need of the most help, I think is not necessarily a bad spend of money. So we've talked about the objective. We talked about how the money can be allocated. So let's talk about a few issues and then practically what we need to do as business owners. So first of all, first issue is a question that we need to ask is how will the IRS protect taxpayer rights? So we're going through and they're wanting to implement these programs to kind of look into us more as individuals and as taxpayers. So they're introducing all this technology. So how our rights as taxpayers going to be protected, or are we simply going to say, okay, the IRS can just look into everything that we do, and it's their right to do so because they are the government. Okay, and so those of us as taxpayers, we need to be aware of this. If we're going to vote in a certain way and put certain types of individuals in office that are going to pass these types of laws, to understand that we are giving our rights away and we're voluntarily allowing for them to do it. Okay, so how is the IRS can go about protecting our privacy? I don't think they care. Okay, I don't think the federal government cares either. It's going to be us as taxpayers to stand up to it. But understand that they're using the guise of closing the tax gap to say, okay, well, these bad people making all kinds of money, we're going to take money away from them and give it to you. All these types of things should be very troubling to all of us, and we just need to make sure that we're opening our eyes to exactly what is going on. Next, the IRS is going to need to hire more people for this enforcement piece, and the big question is, where are you going to find these people? How are you going to train them and effectively implement the program? Right now, this is an industry, when it comes to tax and accounting, it's really, really hard to find people, even in the private sector. And so I don't know how they're going to go about in an industry where people are leaving. They simply don't want to take the extra education to be adequate in the profession. But they're going to go through and they're going to hire these people and try to send them out to do the enforcement on these more complex and higher earning taxpayers. From my experience, most of the time when I'm dealing with the revenue, dealing with someone with the IRS on a taxpayer account, most of the time the person at the IRS doesn't really know what they're doing. And so kind of understand that you get into this and you end up with the situation with the IRS and you're in an audit. In all probability, you're going to be dealing with someone who's in some ways still kind of learning a lot of the aspects on the job. And because the IRS agents aren't specific to your industry, they always don't understand everything that you have going on, understand the movement of your money and these types of things. And so just kind of understand that when you get into these situations, is what you're going to have to deal with. So the feds can go through and fund all this money for additional enforcement, but the question is going to be, how is the IRS going to get their people there, to find the people and get them there to where they can do this effectively? I don't think they're going to be able to, but we'll see. And then there simply isn't enough funding for improvement of taxpayer services past the first 4 years. And so the piece of that is most, I think, needed, and that is essentially, helping taxpayers. That portion of it, there's just not enough funding there. And so once again, kind of going back to what is the main objective of this is those first two areas that we talked about. It's the enforcement and it's the monitoring of taxpayers. And that's really, truly, I think, ultimately where this is going to go. And so now, granted, there are pieces of it to get us to act in certain ways. I have clients that are very, very, they're kind of anti everything that's kind of the direction that's going right now. But guess what? They went through and they deployed capital in a way that gave them massive tax credits to be able to reduce, if not completely eliminate, their ordinary income tax exposure. So they're going to act in a certain way because the IRS says if you do this type of thing, or Congress says if you do this type of thing, then we will give you certain types of credits. And so they're going to get the action, whether it's electric vehicles, this type of thing, energy types of credits that are out there. People are going to go about and act in that way for the credits, even though they may disagree with what the direction is going. So maybe in certain areas there it may be in some ways effective in regards to the passing of this particular law in that area. So with this additional enforcement, what does this mean? What should we be doing as business owners? First of all, making sure that we're keeping proper books and records. I see this many, many times as an owner of an accounting firm, that many business owners simply, they just don't see the importance of keeping up with their books and records, making sure their bookkeeping is done, making sure the records are being compiled from vendors, from employees, from contractors, etc. So make sure you're keeping proper books and records. Spending a little bit of money now to make sure all of that is together is going to do a couple things for you. First of all, it's going to give you some peace of mind that if there is an audit, that everything is compiled and you're ready to go. Secondly, it's also going to provide an avenue for you to understand better what's going inside of your business. Okay, so make sure you're keeping proper books and records. Know what records you need to keep. So what you may have as far as required internally may not align with what the IRS requires. So make sure you understand what the IRS requires as far as when it comes to receipts and records. Big areas that gets looked into: travel. Make sure you have on there, where were you at? Who were you with? What was the business purpose? If you were at a meeting, make sure you have meeting agendas. Keep all of that together with your receipts, with your travel, because these are the areas that the IRS is going to look into. Auto. Keep track of your miles, your business and your personal miles. It doesn't matter. You say it's a business-owned vehicle, whatever the case may be, we're going to write it off. It doesn't matter. You need to make sure that you're keeping track of your miles. If it's a wholly owned business vehicle, meaning it stays on site at your business location, make sure you have a company policy that prohibits personal use of that vehicle. Make sure you understand those rules and that those rules are being followed. Keep your receipts. Understand the documentation you need from your contractors, that you're getting, that they are providing you invoices, proof of insurance. You're keeping all of those things that are required if you're paying someone as a contractor. When you pay a vendor, make sure you keep that receipt, copy of the payment. Okay, keep all of this information. With technology, use it. If you're using such things as QuickBooks, you can attach receipts to the actual transaction inside of QuickBooks. If you're using another piece of accounting software, most of them have now tools that you can electronically attach those receipts. You have employees out on the road. Make sure they take a snapshot of that receipt and they get it to you or your accounting department, so it can be kept on file. Make sure you have your policies and procedures in place to make sure you're gathering all this data and this data is being kept. Keep your books and records. More than anything, that's going to help you in an audit scenario. Quickly compile everything, hand it over to the IRS, whoever's doing that audit. You can hand it over to them, and it becomes a much easier process. When you don't have that, audits can get drug on. We have one now that's been going on for well over a year and a half, approaching 2 years. Okay, they do take a long time at times, but when things are very well organized, then you're going to get through the process a lot more quickly. So make sure you keep your books and records. Second, make sure you're using a licensed tax professional that knows your area. So just don't find this kind person that does their taxes in their basement, or you find a local tax professional that, they're really nice and they do, some of the small business in the area. But if they don't know your business, they don't know your industry well, they don't have experience in your area, don't use them. Find a licensed tax professional. Make sure they're a CPA or an enrolled agent. They can actually do the representation. They can actually sign the tax return or electronically file the tax return for you. And their name appears at the bottom. They're legit. Okay. And then also they know your area of business. If they don't know your area of business, you get into audit scenario, you're gonna get into some trouble because they're not going to know the nuances of the tax code as it relates to your business. So use a licensed tax professional that is competent in your area of product or service. And then number 3, and lastly, make sure if you're utilizing any sort of tax strategies, make sure you understand the pros and cons of the strategy that you're using. Understand there are strategies out there that you've used them. Sometimes we will advise clients understand that you may have to give some of this back. Okay, so make sure you understand the tax strategy. That you have a good enough understanding that you're walking into something with eyes wide open, and make sure you vet the person you're working with. Unfortunately, every year we get information back from people who've deployed a lot of money with people who are bad actors. So they're out there, they have great marketing strategies. They're out there saying, well, we have these tax strategies we can place you in to save you a ton of money in taxes. They take your money and then they just simply disappear, or they end up, you end up finding out that they're being indicted. Okay, so make sure that that you're vetting the people that you're working with. Vet your tax professional and vet those that you're going to be deploying capital with. Now, we spend a lot of time trying to connect individuals, connect companies that can help with tax strategies with our clients, and we'll vet them for as well as we can with our clients, but we also ask our clients to vet them as well. So if you're implementing tax strategies, make sure you're vetting them. Okay, so what should we be doing? Make sure that we're keeping good books and records. We're finding a licensed, competent tax professional for our area. And then thirdly, making sure that we're utilizing tax strategies, we understand them, and we're using people who have been embedded and that we can feel comfortable with deploying our capital with. Once again, this is Josh Belk with the Belk on Business podcast. Hope you have a wonderful day. Talk to you next week.